Well, good afternoon and welcome to this CAFI webinar on a CAFI-commissioned research project carried out by Deloitte Canada on best practices in the digitization of credit protection insurance, presented by Deloitte Canada. My name is Keith Martin, and I am Co-Executive Director of the Canadian Association of Financial Institutions in Insurance, or CAFI. We are delighted to be joined today by two leading Canadian experts in the digitization of insurance. Melissa Carruthers is a partner within Monitor Deloitte's strategy consulting practice, where she is the Canadian Life and Health Insurance Strategy and Transformation Leader. Melissa joined Deloitte after working a number of years as an actuary in both the direct insurance as well as reinsurance industries. In her current role as a strategy advisor, she works with the leading life and health insurance carriers and financial institutions as they define and execute on various strategic priorities across the organization, with a particular emphasis on strategic growth initiatives such as new market entry and sales and distribution optimization and new digital business models. Mark Lewis is a senior manager in Deloitte's insurance strategy consulting practice. Mark joined Deloitte after working as an underwriter for a leading global insurer. His focus is on supporting insurers in their development of corporate and digital strategies, as well as in defining digital-first experiences that are anchored in customer needs. His consultant clientele has been primarily Canada's big banks, leading property and casualty and life and health insurers, as well as provincially mandated insurance institutions. Welcome, Melissa and Mark. On behalf of myself and my co-executive director colleague, Brendan Wicks, and the CAFI Board of Directors, thank you to all attendees for joining our webinar today. CAFI is a not-for-profit industry association dedicated to the development of an open and flexible insurance marketplace. Our 15 members include the insurance arms of Canada's major banks and credit unions, along with their insurer business partners which underwrite credit protection insurance and travel insurance. This webinar is an exclusive opportunity for regulators, policymakers, and government officials to hear from Deloitte Canada on the results of their research study on best practices in the digitization of credit protection insurance. We have also invited our CAFI member representatives to sit in on this webinar, and many of them are in attendance today. Now, I want to mention that we have in attendance today representatives from the following entities in the government and insurance regulator and policymaker community across Canada: the Alberta Insurance Council, the Autorité des marchés financiers, or the AMF in Quebec, the Insurance Council of BC, the British Columbia Financial Services Authority, or BCFSA, the BC Ministry of Finance, the Government of Alberta, the Canadian Council of Insurance Regulators, or the CCIR, the Government of Yukon, the Nova Scotia Office of the Superintendent of Insurance, the Nova Scotia Department of Finance and Treasury Board, the Ontario Ministry of Finance, and the Financial Services Regulatory Authority of Ontario, or FSRA. Welcome to you all. This webinar will be recorded and it will be posted soon on our CAFI website. In the near future, we will also be posting an executive summary of the research study's findings on our website, and we will issue a media release on the findings. If you have any questions that you would like to pose to one of our co-presenters during the Q&A session, please send them to me as the host using the Q&A function of Zoom, and I will pose them on your behalf. Unless you specifically request in your question that you do not wish to be identified as its source, I will pose all questions on an anonymous basis. Let's now jump right into the webinar. Melissa and Mark, over to you.
Thanks so much, Keith, and thanks, CAFI, for having us. Thanks to all of the attendees who took the time to join. Mark, do we want to pull up the document for us to walk through?
Can you see my screen? Great, thanks.
So we'll jump right into the contents of our presentation for today and some background on the research report itself. We're going to look to spend the bulk of the time walking through the key insights from our research, some of the important factors that the industry could take away from this, both regulators as well as the prominent underwriters and carriers within the space, or distributors within credit protection that they can take away as a means of helping to accelerate their digital maturity with respect to credit protection insurance. So we'll start with some of the context and objectives. So why we were engaged and partnered with CAFI to begin with. This all came about in the earlier days of COVID, recognizing the implications that COVID would have on the need to embrace digital, but also respond to the increased adoption of digital from both consumers as well as the sales representatives and the different partner groups within credit protection. So CAFI embarked on their own consumer research project where they gained insight directly from CPI clients, which we'll use for short for credit protection insurance throughout the presentation. They conducted consumer research to basically test whether or not there was going to be increased willingness to utilize digital channels to engage directly with their banking institutions for the purchasing or discovery, servicing, and claim related to credit protection insurance. And the feedback from that research conducted by CAFI at the time validated that was in fact true, that the preferences and needs of consumers were evolving from historical research that they had completed. And so they reached out to Deloitte to better understand how our own individual perspective, but also ideally engaging with the industry itself, basically testing whether or not the industry was at a position with their digital maturity to meet the needs of consumers and to meet the increased demand for and expectation for digital experiences being offered by the industry. So the real objective of our research mandate with CAFI was to, one, provide a view on what best-in-class digital experiences look like for consumers in insurance, and specifically with the lens of CPI. Two was to understand just the overall current state of the digital maturity of the industry relative to that best-in-class digital experience. And then finally, be able to identify some opportunities for the industry as a whole to help accelerate their digital maturity. So I'll move us forward into the approach that we took for conducting the research, the key inputs that served as informing the basis of our recommendations and of our findings. Then we'll get into the findings themselves. So we had three main research methods that were taken. The first was we did external industry research. So we spent a lot of time understanding and assessing how other global markets and adjacent insurance industries outside of CPI are leveraging digital to improve the experiences that they're offering, to make their back office operations more efficient, and to effectively evolve their business models for the future. So the first input that we used was doing that global research. So how are other leading digital organizations, specifically insurers, making investments and addressing some of the underlying challenges of really being digital. The second was we engaged directly with the CAFI members. So all of the CAFI members participated within this research study, both in the form of interviews, so meeting directly one-on-one with interviews so that we could kind of dig deeper into what has potentially been preventing increased investment in digital capabilities, the historical priorities and investment that have been made to date, and then where they see the biggest opportunity for improvement and accelerating the digital investments that are being made across their CPI portfolio. And then we conducted a survey, and the survey allowed us to not only gain additional insight from the members directly, but it's what allowed us to inform some of the benchmarking and relative feature set comparison across the different underwriters and distributors to be able to inform what the overall maturity of the market is today. So we split our key insights and our findings basically aligning to how we conducted the research. So the first is overall providing some of the key insights around what we found from our external market analysis. What are some of the key attributes and capabilities that are associated with really best in class digital insurers to serve as that benchmark for assessing whether or not the Canadian CPI industry really is mature in its digital capabilities, and where we felt like there might be gaps, what are some of the guidelines or the best practices that they could look to refer to when moving forward. We'll talk a bit about some of the external research findings first, and then Mark will get into the overall maturity of the Canadian industry and our findings relative to the CAFI members themselves. So there's four main key factors that we found were really driving the need for digital, and this went above and beyond just customer expectations. I think the other three that are increasingly important are around the competitive landscape. So we see more and more new entrants such as insurtechs, fintechs, looking to play within the insurance space and offer competing products. The same is true when thinking about CPI, knowing that other individual insurance products like term insurance will continue to be one of the prime competing products. And there's more tech-enabled digital-first business models coming to market, forcing the need to rethink how these products are distributed. The second is the operational efficiency. No longer will the high-touch manual processes and models that we have in place today continue to support the profit margins that these businesses are seeing. And so the need to look at how we can further digitize operations and redesign our processes that support those front-end client experiences is going to continue to contribute to the need to digitize CPI. And then finally, the greater availability of data and the ability to generate insights from that data given emerging technology, this only allows for more opportunity to really embrace digital. And so
Keith, I'm sorry to interrupt. Could I ask you a quick question on this?
Sure.
Just in terms of the competitive landscape, I know one of the things that you'll be talking about is the importance of underwriters and distributors to work together in terms of offering a digital experience, and they all struggle with these legacy systems. And I'm wondering, in terms of new fintechs that are coming in with brand new systems without the legacy challenges, how big of a challenge do you think this is for the traditional industry?
So we've seen it more of a challenge in some of the global markets where we have seen some of the insurtechs really look to compete head-to-head with carriers. Lemonade is a good example of that in the US. In Canada, though, we haven't seen that end-to-end traditional insurer model competition. It's mainly been insurtechs that are looking to address very specific points within the insurance value chain that have been left unaddressed by the incumbents. So because of the capital requirements, because of the risk associated with entering into insurance, the cost to entry is actually quite high, especially in Canada. And so we see far fewer insurtechs and new entrants in Canada than we see in the US. But I think what it allows for is more partnerships. I think that you will see new models emerge, especially digital brokers coming into market, what we're kind of calling digital MGAs. So there's going to be different types of competition in the future. It's not going to continue to be the same competitor sets that we've seen historically. I think we can move on. So this slide here summarizes some of the key insights that were generated from the CAFI survey, which helped to inform some of the guidelines on what best-in-class customer experiences could look like within the context of CPI. And so a couple of the key ones that we wanted to be able to call out is that majority of consumers now feel very comfortable conducting the education and discovery online. And so the need to have very seamless, intuitive user experiences, some basic education tools online for consumers to be able to conduct on their own to educate themselves before then engaging directly with a bank or FI and looking to validate, some of their original thinking on their needs and what the different coverage types might be appropriate for them. Typically, when getting into assistance, we actually still see that 40% of the consumers within the research still do want to engage directly with a sales representative. And so while there's increased desire to leverage digital channels, we don't think that in the future this is going to be a completely end-to-end client-led experience. We think that it will be more omni-channel. It will be virtual assistants. So it may not be that people are going into branches anymore and conducting this experience in person, but the role of a sales representative and being able to provide that guidance and education and validate some of the initial discovery before feeling comfortable moving forward into purchasing will definitely continue to be a model in the next 5 years. When moving into claims and servicing, I think this is where the bigger shift is in the current model, which is majority of consumers do expect some degree of self-servicing tools for basic transactions. And the extent to which that would support claim submission, being able to easily submit claims documentation, getting updates on the status tracking of either their application and or on their claim. Those are going to be some of the bare minimum table stakes digital features that consumers will come to expect for this industry. When we think about assessing the overall digital maturity of the insurance industry as a whole, but then for CPI, what we generally see is that Canada tends to trail other global markets across the board. And so when it comes to life and health insurance, Canada tends to trail the UK by about 3 to 5 years, and then the US by 2 to 3 years, depending on the trend itself. But overall, the use of digital, the use of data and analytics and emerging technology, and the shifts in some of the trends that we see within the industry, we tend to see a bit of a lag. And so we often look to those markets for inspiration. Where we see industry leading right now globally, what we deem as actually being digital, where they're utilizing digital in their core business model. They have begun to transact, they've begun to engage profoundly differently from the traditional business models. Where we see industry leading within the Canadian market, what we've deemed as just becoming digital. So they're leveraging digital technologies. They're less siloed. They're more synchronized across the organization. They're much more advanced in the changes to their current business model and the way that they think about customer experience, but it's not quite being digital just yet. But our insurance industry average and the CPI market today, we've classified as we're simply doing digital. So we're leveraging digital technologies to extend some capabilities, but more or less most organizations are digitizing historical processes, and they might be using certain select digital features, but they're not being done in a cohesive way, and it's still largely the same business and operating model and customer model that the industry has used. In about 5 years' time, that's when we would expect for us to see more of us being digital and moving from doing digital. And I think we're going to see more investments in the acceleration of digital in the next 5 years than we have in the past 10 to 20. So a significant shift. And I think the pace of digital adoption and maturity within the industry, which is fundamentally going to change the investments that are being made over the coming years. So we'll touch on this because I think this is more or less the framework that we continue to refer to throughout the rest of our findings. So it's in conducting our analysis of what do best-in-class digital insurers look like, what are the type of experiences that they're offering by leveraging digital. These tend to be the 6 common attributes and or supporting capabilities that we tend to see associated with those organizations. Generally, if one of these attributes is not apparent or having significant investment behind, you likely are going to fall down on your aspiration to truly be digital. So a couple of them that I'll call out is stressing the importance on having an articulated digital strategy and digital ambition. So to what extent your future experiences are being enabled by sales representatives, or if the overall ambition of your organization is to have it be end-to-end client-led. That will drive very different experiences from a design perspective, but also the features that you look to have within that experience and offered across the journey for the client will look different, and how you prioritize your investment will be different. User-centric digital experiences, I think this is a really important aspect, ensuring that you're taking an outside-in type of approach to the experiences that you're bringing to market. So you're testing it with users, you're understanding why they've dropped off at certain points within the journey, and that you're really informing that user testing into how you continue to refine and enhance the features that you're bringing to market. Sophisticated data analytics and insights. What we see is it's very, very difficult to offer intuitive digital experiences without utilizing data and insights to not only inform where you would prioritize your investment in digital, but also the feedback loop of where you need to make enhancements in existing digital features that are already in market. I think the digital talent and culture is hugely important. Not only just having the right access to the right skill sets to support the digital capabilities that you'll need to have, but I think it's more about the culture piece. This is not an industry that has typically been very digital and innovative. So thinking about what type of change management needs to be in place, how you can shift the culture of your organization to have that digital mindset. I think moving into different ways of working, like agile, a lot of that is new to insurance. And I think what some of the distributors have the benefit of is they are part of larger banks that have been on their digital journey for a number of years, and they have the benefit of accessing some of the broader enterprise capabilities and lessons learned from the broader bank that perhaps some of the insurance industry as a whole doesn't have in-house. And then finally, Keith, you talked about the technology. The issue of legacy systems and having multiple legacy systems for many organizations is going to be an inhibitor of being able to drive digital at scale. I think that's going to be one of the biggest challenges to be addressed in the coming years. But for some of the banks and some of the newer or smaller insurers that don't have that challenge, they actually might be in a better position than others who have a fairly complex technology environment today.
Melissa, if I could just ask you a follow-up question on this digital talent and culture. I was at a conference recently, and there were two takeaways that really struck me. One was that millennials, when asked what industry they'd like to work in, 4% said insurance. So it does not come top of mind to that age group. And another takeaway was that CEOs in insurance, but across all industries, when asked what was their greatest challenge, they said it was talent acquisition and retention. That was the biggest challenge they faced right now, ahead of all the other challenges. So when we look at those two things, it really provides a bit of a problem for the industry in terms of getting the talent you need to go down this path that the industry is seeking to go down. I'm wondering if you have any advice from your consulting experience in terms of how CAFI members can address that issue.
I think the one on talent acquisition, the fight for talent, I don't think that that's something unique to insurance. I think that'll be a challenge for all organizations right now, Deloitte included. But something that I do think is really important now more than ever for the insurance industry is embracing partnerships, because these are not necessarily capabilities that you need to build in-house. And all of the experiences and the capabilities that you're looking to bring to market as a result of your digital strategy or your roadmap, those could be things that you partner for. So I think being open to new and different partnership and delivery models is probably going to be a really big asset, not only in addressing your talent gaps, but I think knowing that you don't need to be the one who's building everything, and in many cases probably don't need to be, because those aren't capabilities that most insurers have in-house today. And it's going to take a lot longer to acquire them or build them internally rather than going the route of partnering.
Great, thank you.
Great, thanks, Melissa. So we'll start getting into sort of the insights that we learned through our research with the CAFI members. So for the key takeaways, I'd say the biggest one when we look at it is whether we're speaking with distributors or underwriters, everyone saw digitizing credit protection insurance as a priority. Even a large portion of people we surveyed and spoke to saw up to 40% of applications being fully digitized end-to-end in the next 3 years. They did also bring up that credit protection insurance has a lot of unique challenges. Two of those being how dependent it is on the lending journey, as well as the regulatory environment that has nuances across provinces, which led to a lot of what we've already spoken about, and we'll get into a bit more on the need for collaboration within the credit protection insurance industry in order to provide these winning digital experiences. There was a lot of discrepancy between the maturity of digitization across both distributors and underwriters. A big indicator of that, it was simply how far back they've started. The different distributors and underwriters are at different stages in their digital evolution across where Melissa was talking about the becoming, doing digital, based on when they started investing in digital capabilities. The large majority, though, still rated themselves as being somewhat behind the curve in terms of being digital. And a lot of that stems from comparisons to other industries, either within insurance or outside of insurance, where credit protection, due to the unique challenges spoke about, might be a bit behind, as well as some concerns on adoption. Several distributors have provided digital features, and the adoption from some of the representatives just isn't as high as they would have hoped, just justify some of the investments within the digital technologies. Something else that came up a lot is just how important digital is from front to back. When we think of digital, it's easy to fall in the trap of only seeing that slick front-end interface that you interact with. But in order to be able to benefit from the scale and from the digital experience you're providing, you also need to think about digitizing internal processes and equipping employees with digital tools to be able to perform their jobs. And I'd say lastly, just really reiterating, it's collaboration and digitizing across different layers. And we'll get into that once we get into our framework. But that's really the only way to provide these winning experiences from a digital CPI perspective.
Mark, if I could just jump in quickly and ask you and Melissa, if you could just elaborate a little bit on the regulatory environment as a potential challenge to navigate. Could you just share with us a little bit of what you heard from our members in terms of that issue?
Great question, actually, great segue. That's the first point on this slide, so I'll leverage that for here. Because there are a lot of things that make CPI unique. And one of them being those nuances across regulation across the provinces. Now, when you think about digital, one of the key benefits across all industries you get from digital is that opportunity to scale experiences. And when they have to adapt the processes for each different province, it does limit some of the potential they have. Now, that doesn't mean investments shouldn't be done. It simply means that there needs for greater collaboration and understanding of how can they invest in digital experiences that make sure to follow the requirements across each province and also deliver the experiences that are consistent and not favorizing either province over the other. I don't know if Melissa has anything to add on that point.
Yeah, I think the implication of that is really that you end up creating your digital experience and the processes that align to the most, the strictest provinces regulatory environment, right? So it can definitely be addressed. I think in addition to maybe just the lack of harmonization across the different regions when it comes to the regulatory and what that means for the digital experiences experiences that you can offer. It's also just the extent to which many of the distributors expect continued changes to some of those regulations. So what that means is it becomes much more cost prohibitive to be able to maintain those digital experiences that are, once they're in market, to keep pace with some of the changes that are happening from a regulatory perspective.
A few of the other points that make CPI unique compared to other industries. When we think about digitization, one of the first thing that comes up is the need or desire for personalization. And now credit protection being group underwritten, there are still ways to personalize the experiences, but it does limit some of the personalization at the product or underwriting level there. The next one we talked about is the strong ties to lending. CPI is always within a lending experience. Traditionally, you would have credit protection brought up through the lending process by the representative as they're discussing the different lending options. Now, as a lot of distributors have invested in digitizing their lending experience, investments haven't yet flowed in equal proportion to the credit protection experience there. So sometimes now creating somewhat of a break in experience, given the different speeds and investment done. Now, I guess, opportunity is to look at how can credit protection be embedded within the digital lending experience. The other element, somewhat tied, is the number of stakeholders involved. A lot of the capabilities, when we get into the digital experience later, we'll see there's responsibilities shared between the distributors and the underwriters. So understanding how can both parties collaborate in the investments to make sure that the digital experience is seamless and consistent for the customers. And lastly, it's making sure that through the digital process, we're maintaining and even improving the fair treatment of customers and best practices, and making sure that anything offered customers are eligible and following the standards that have been set by regulation. Here's a framework that we took when looking at what are best-in-class digital experiences for credit protection. The first call out I'll do is the 6 layers you see in the middle, obviously very closely tied to the 6 elements of winning digital experiences that Melissa talked about earlier. Now, those 6 layers are really framed between, at the top, stakeholder needs and best interest, which would include what your customers need and what's in best interest for them. Now, at the bottom, we do want to make sure to keep in mind regulatory requirements and fair treatment of customers. So across each of these layers, these 2 anchoring points should always be considered. Now, why these 6 layers and why this order? A lot of the experiences, digitization, of what Melissa quoted as doing digital, has been doing piecemeal components of either the value chain of these different layers. Now, when thinking about what is a becoming digital experience for credit protection, is really considering each of these layers combined. So making sure that at the top of the house, there's a digital strategy for credit protection. And from there, flowing, aligning the user-centric experiences, your operations, your analytics capabilities, your technology, and last but not least, the talent that we've discussed as well, to your strategy, to making sure everything is flowing in the same direction and investments are aligned. Now, what does a best-in-class experience resemble? We drafted this illustrative experience here. While there are many different experiences that could take place, this is one illustrative journey that I wanted to walk you through and show the components that we discussed earlier, how they come to play to create that improved experience for the customer as well as the representative. So starting at discovery, credit protection not brought up yet, but Sam here, thinking about buying their first home and starting their mortgage research. Now, really, credit protection comes to play in step 2. While Sam is going through her quote, sorry, not her quote, filling in the application, she's notified that she's actually eligible for credit protection. Through her representative, Blair, she can discuss what is the value for her and how is that actually helpful for her specific situation, as well as the eligibility and making sure that not asking her to re-enter information twice could automatically detect what is the best case scenario for her. At the purchasing moment, that's really integrating within the lending experience, making sure that she's not asked to repeat information, that the health questionnaires can be built into digital experiences. And if there is a need for follow-ons, it can be scheduled digitally, but really trying to keep it as embedded as possible and only kicking it out for some specific unique cases. From a servicing standpoint, also bringing back the concept of embedment through the same platform where Sam would be able to verify see where her mortgage is at, notice her balance, as well as her payments, being able to request to talk to Representative Blair and make changes based on any kind of life moment change in your life. So in this case, we talked about Sam having a baby and wanting to make sure that from a disability standpoint, they were adequately covered. From a claims perspective, we talked about a lot of complexity at the claims level with the different distributors and underwriters. Probably one of the areas that currently is the least digitized. There are a lot of specific information requirements and uniqueness to each individual's claims, but making sure that at least from the get-go, the customer is able to file a claim, upload some digital paperwork, and make them feel at peace that the claim is being handled and that they are notified of progress throughout the claim process, and that if there are payments, they can be facilitated and not keeping them waiting or having to fill up confusing or complex paperwork when it could be done by uploading digital documents. Lastly, the proactive engagement, and that's really where you go over and beyond what the traditional touch points are, and making sure that Sam is engaged not only at the moment where they're paying for their policy, but if there are changes in Sam's portfolio, that there can be some automated nudges that recommend what the best action would be to make sure that they're still getting the best value they can out of their credit protection. Great.
Mark, just before you jump into this next slide, I just want to remind attendees that you are very much invited to ask questions. Just use the Q&A function at the bottom of your screen to type a question if you have one, and I will pose it to Melissa and Mark. Thanks, Mark. Back over to you.
Oh, thanks, Keith. Stemming from the 6 layers we previously discussed, so within each, we identify the capabilities that we would typically see from a distributor or insurer for credit protection. Now, the most important thing to note on this page is I think that all these capabilities would vary depending on what your digital strategy or what your overarching enterprise strategy is, which is why at the top in the credit protection insurance digital strategy, we haven't specified all the capabilities that would go there. Those would be unique to each organization, which would then have trickle-down effects on the different capabilities within this map. But these are the ones that we suspect to be the most consistent across the distributors and underwriters. Other key element to note is within the legend, we've called out what is fully gray as a capability being something that's primarily on the distributor side, what is fully blue, primarily on the underwriter side, and then the ones that have a blended gray and blue are areas where we see a greater need for collaboration. One key element to note is just the amount of capabilities here that have that shared gray and blue, just reinforcing the need for collaboration within credit protection. Keith, I see you went off mute.
Yeah, I'm just going to, for anybody on the call who's not that familiar with credit protection insurance, just add a little detail to this, Mark. So what Mark is talking about is if you get credit protection insurance, it typically will be offered by a distributor where you're purchasing the mortgage or the loan. So it could be a bank or a credit union. But the actual underwriter is typically an insurance company, a completely separate insurer. And so you've got 2 very large separate organizations, each with their own systems. And to Mark's point, they have to collaborate together in terms of having their systems talk to each other to offer the seamless digital experience to the customer. So I just wanted to add that detail just as a bit of background, Mark, because I think this slide is so important in terms of this opportunity, but also this challenge in credit protection insurance, where it's not just one company doing it itself. It's got to be more than one player, and that does make it more difficult.
Yeah, not only are the integration with systems the systems might vary by distributor or underwriter, but also the processes that they follow and some of the information they might request. And we've had instances where some of the underwriters called out having tens and dozens of different systems they need to make sure that their system can integrate with if they want to be able to collaborate and have a seamless experience. And again, last thing to note on this page is really every capability here could be a starting point of when you're trying to look at what the digital maturity of your industry is whether or not this capability is present in your organization as a distributor and or underwriter, and understanding where do you see in your vision this capability needing to be, and then working back from there to understand what are the initiatives you need to do in order to bring these capabilities to life across the layers to make sure that you're not just doing parts of digital, but that you're becoming digital. And that concludes our presentation and open up for questions.
Melissa, Mark, I have one, which is, I know that it is unique in Canada's CPI, and it's difficult to make direct comparisons in other jurisdictions, but I also know Deloitte has tremendous experience and knowledge of systems in other countries, and I'm wondering if you could just share with us what are some of the sort of best practices in other jurisdictions and what CPI in Canada could learn from those jurisdictions.
I think, Keith, as it relates to digital, a lot of them would have been captured in some of those key insights earlier slides that we shared. So I think one of the biggest challenges to embracing digital in an area where there's a number of different stakeholders, that's definitely going to be a challenge that could be overcome by clarifying just the roles and who's going to be able to own that end-to-end experience, or who feels like they are in the best position to provide those types of digital experiences between the underwriter and the distributor. And that just means more collaboration, but what it also means is the distributor's ability to offer kind of seamless digital experience really is going to be dependent upon the underwriter, and ensuring that the processes that support the back office functions for creditor, that they're speaking to one another. So I think that would be one of the biggest takeaways that we've seen globally within markets where there are a number of different stakeholders, and then just thinking about the role and the need for assistance throughout the purchasing journey. And that will continue to be a role that needs to be played in the future by a sales representative, and the likeliness of seeing similar adoption of credit protection and or any other insurance protection through just client-led channels will likely be lower in the short term until the experiences can be intelligent enough that we make it very intuitive and easy to digest through digital channels. So hopefully that addresses some of your questions.
I have a couple of questions from the audience that I think I may tackle, and if you want to add anything, please feel free to. I'll try to be brief. One question is, in terms of consent to CPI, what mandates, requirements do financial institutions have to comply with in regards to disclosure and fair treatment of consumer requirements? So the first thing I'll say in terms of the answer to that is that it doesn't matter what channel is used, whether it's digital, in person, phone, the same requirements exist and the same expectations have to be met. So this presentation on digitization does need to factor in the regulatory requirements in exactly the same way as would occur with more traditional channels. And in terms of the requirements, they're quite extensive. Insurance is, of course, provincially regulated, and so the specific requirements will differ from province to province, but they're all going to include expectations around disclosure, around fair treatment of customers, often have specific requirements around complaints handling, privacy, cybersecurity, incident reporting, and certainly full disclosure and full sharing with the customer that credit protection insurance is entirely optional are requirements in every jurisdiction in Canada, and something that all our members adhere to very, very thoroughly and rigorously. Another question that was asked is, what are some documents that the insurer and the underwriter use to evaluate the client, and are they the same or different? Melissa, Mark, you may want to comment on this after I've made my initial comment in terms of using data to drive better results. But in terms of the current situation, usually the primary relationship with the client is owned by the distributor. So that would be where there would be documentation and questions asked of the customer. And unless there is a need for exception management and additional questions, perhaps there's some sort of medical condition that requires further underwriting, usually that is it in terms of the documentation. If there's additional information required, then it could require asking the customer to interact with the insurer or underwriter to get additional information. Now that's current state though, Melissa and Mark, and I know that perhaps data can drive better decisions in future. So I don't know in terms of a future state if you want to add anything to that.
Yeah, I think what we heard is the number of handoffs between both that time of application and then this comes up again at time of claim, that the distributor really does own the source of truth from a policyholder data perspective. And so that for the policyholder to be able to signal the loss, they would do so with the distributor, who would then kind of trigger the processes on the back end and share the required information with the underwriter. Once that's opened up, then the underwriter, if they had questions, would reach back out to the client. So I think that triangular exchange of processes and information is what a number of the distributors are looking to see if there's ways to digitize and avoid kind of the back and forth. And that's where the collaboration will be required to understand what will need to be true on the back end and what will need to be different in the future if the client is able to use one channel for submission, and who's going to kind of own that experience at the various different touch points in a way that minimizes some of the back and forth between all three parties.
One further question, Melissa and Mark, is around another product line that many of CAFI members operate in, which is travel insurance. There were many similarities with credit protection insurance, but also some significant differences. So I know that wasn't the focus of your study, but if you had any comments that you wanted to make around digitization in that area, there was an interest from one attendee in hearing your thoughts on that.
It's interesting because Mark and I are going through this right now and defining what the end-to-end client experience looks like for various lines of business, and travel, specifically travel medical, is very high touch and can be very high touch. And the need for digital channels to deal with some of the volumes. I think COVID was one of the demonstrations of just how valuable having a digital experience, even if it's for assistance while you're out, being able to notify or have virtual chat for some of the basic questions, being able to confirm coverage. Self-serve options for travel, I would argue, are probably more prominent and a bigger priority than on credit protection, just given the volume of claims and the number of interaction points on that particular product line. So the end-to-end experience, very different. But I would argue that the very same approach should be taken that Mark and I did for this type of research, which is really defining what you want that end-to-end experience to be, to address the primary friction points, and then use that as a means to identify the capabilities required to support them, and then figure out where you have the biggest gaps and then prioritize the investments in that manner. It comes down to how you prioritize. And I think what we generally see is prioritizing based on business case. I think what the industry is going to need to do is look at broader factors like customer experience and the weight that you put on customer experience over just a standalone business case, which is very internal view. How does this add value to us as an organization versus how does this add value to our customers? That's what digital experience is going to become, and how it can be used as a differentiator as opposed to just how do we make our business more efficient from a cost perspective.
Right, excellent. Well, we're coming to the end of our hour. It's been very insightful. I really appreciate your expert knowledge being shared with our attendees. Before I sign us off, Melissa, Mark, if you have any final observations, I'll ask you for those, and then we'll close up.
Nothing for me, Keith. Just want to thank you and Kathy in general. It's been a really great partnership. We've really enjoyed the research, and the participation of the members, really did contribute to our ability to provide the insights that we've shared today. So thank you to all of the Kathy members as well for their participation and engagement throughout. Happy to address any other questions offline. Thanks so much.
Right, excellent. Well, I want to also thank the attendees who participated today. We really appreciate your time. And I do want to remind you that the webinar will be posted on our CAFI website in the next few days. So if any of your colleagues were not able to attend today, they'll always have the option of seeing this presentation at a later date by going to cafi.com. So thank you again, Melissa. Thank you, Mark. And to everyone on this call, I wish you all a great rest of your day. Thank you.
Take care, Bill.